What's up, investing aliens? Eric here, Mr. Fired Up Wealth. Hope you're having a great 2024 so far. Of course, the market has been selling off a little bit. Shouldn't be surprising, especially if you're in a Discord community. But stocks were definitely getting ahead of themselves in the end of 2023. So a little bit of cool off is actually welcomed here. In this video today, I'm going to do two things. I'm going to give you some real talk, and then I'm going to share the top 7 stocks in my main portfolio. So my primary taxable brokerage. It's different from the video I just did a couple days ago, which is the community portfolio. The main portfolio is the primary taxable brokerage. Ended the year over $1.7 million. It's a little under that now after a couple days of selling here in early 2024. But that last video was the community portfolio and building a portfolio from scratch if I were a new investor in 2022. This main portfolio is very different. I've had a lot of these stocks for many years. I think it's powerful to have both portfolios because they give you examples of what a new investor might do and then how someone who's more seasoned, who's been in the market for a while, what they might do. I've been investing for 25 years at this point, so my portfolio is going to be obviously a lot different than if you just started investing this year or maybe in the last couple of years. Now, one thing I shared with the community this morning is really about the psychology of investing, especially if you're a newer investor, but really this applies to everybody. It's always hard to know when to buy. And here's the thing, we teach about having a portfolio blueprint, figuring out the core stocks that you want to own, the highest conviction stocks. Now, what happens when stocks are at all-time highs like we just recently saw? What we do as humans, and trust me, I've been there before and I've made this same mistake, is we'll say, you know, I really want to own Microsoft or Amazon or CrowdStrike or whatever you're into, but those stocks are pretty expensive here, so I'm going to go out and find something else to buy that's on sale, a better stock that's beaten down, that hasn't ripped yet. And I covered this topic recently in a chart day. I did kind of a real talk and went off for a little while talking about this topic, but I think it's important to bring to YouTube as well. And so what you do is say, okay, I really want to own these other stocks and I want these to be my core positions to hold for 5 or 10 years, but I'm going to wait for those to come down. So I'm going to go find some, meme stock or some penny stock that I think can rip and go higher. This is a mistake that a lot of people make, especially in 2021. You saw this time and time again. You think you're doing the right thing because you're buying what's on sale, but you're ultimately buying something that you don't really want to own, you don't probably understand, and don't really have conviction in. So when that stock sells off, well, then you're just going to sell it at a loss and kind of move on. And then you end up buying the stocks that you wanted anyway, probably at the same price or maybe even higher down the road. And this is where that mindset's so different. If I've already got my portfolio baked out and I own these positions like I'm going to share here today, well, I'm going to buy a lot differently because I'm not buying those core positions. They're already baked out in my portfolio and I own what I want to own. If you haven't done that, you need to be buying differently. You need to focus on what you have the highest conviction and what you want as your core. Now, I'm not saying just go buy any stock at any price, not at all. What I'm trying to do is teach you to avoid the pitfall of going and buying something you don't really want to own just because you think it's a better price. I think that 2024 will end higher at the end of the year than it is now, and I think we'll have new all-time highs on the indexes, but it will not be a straight line up, and it's probably going to be messy along the way. And so you saw a lot of these growth stocks sell off 5, 10, 15% just in the first couple of days of 2024. Now, our memories are short. If you remember, this exact same thing happened in 2023. The first few days of 2023, everything sold off, especially growth. In fact, some of the best prices on some of the favorite stocks that we follow, you would have actually gotten in early 2023 in January, about this time, 365 days ago. Now, there's no guarantee that it's going to happen again, but the point here is you can't necessarily time the bottom, and you have to buy the stocks that you want to own. At the end of the day, when you buy a stock, you own part of a business, and you have to remember that. So we're on our 5th day of selling in the NASDAQ, really, for growth stocks. I expect that to start to turn around here. I'm recording this video here Thursday morning. So you could see, green on some of your favorite names by the end of the day. Friday might be a green day, but remember that just what happens today or tomorrow doesn't mean that it can't go lower or higher next week or next month. When you buy a stock, the ultimate goal is what it's going to be worth when you want to own it later. And again, you don't buy it at any price. But the point is if you don't own anything you want to own, days like today are decent areas to make some entry points, nibble some entry points. knowing that you're going to buy more later if it goes lower because you're going to DCA. And if you're a young investor just starting out and you have a $500 portfolio and you're putting 250 bucks in every paycheck, well, you're moving the needle every single time you buy every 2 weeks. If I've got a $1.7 million portfolio, I need $17,000 just for 1%. And that might take me months before I can even accumulate that much money. So it's a very different thing. And again, I have to stress, people will come into Discord and they'll see me buying something like ACMR. ACMR is a nice to have. It's a fringe stock. I have conviction in it, but it is riskier. It's kind of between spec and growth. I mean, it does have a PE ratio. It has risk with China exposure, with customer concentration, and so on. But the point is that's not a core holding. It's something that's nice to have. It's a fringe play that I build around the core of really high quality stocks. And in most cases, you're gonna have dividend stocks and ETFs. Now, 35% of my main portfolio is dividend stocks. And just for example, what I mean with core, with this main portfolio, my top 30 positions, that's gonna be 76.64% concentration. So that means I have 64 total holdings. 34, the bottom 34 is only 23.36% of composition of the portfolio. And so a lot of those spec stocks and those nice to have, those fringe plays are in that other 34, that 23%. The core is going to be in that top 3/4 or so, and that's going to be the focus. Those are the stocks that I want to own that are going to be the primary holdings, the core of the portfolio that I build around. Now, if I didn't already have that core, I wouldn't go out and start a new portfolio and buy spec stocks. I wouldn't go buy small cap semis. I wouldn't go buy Indy and ACMR if I owned nothing else. And I think a lot of people miss that. They come in, they're new, they're like, well, hey, this guy on YouTube's buying this or that. Well, you don't really understand what their intent is. What's their goal? What's their blueprint? What's their portfolio? Again, a lot of people on YouTube are just focused on what stock do I buy now, make a quick dollar tomorrow. And you have to be careful, because if that's not your mindset, there's nothing wrong with that. But if that's not your mindset and you're trying to play the same game, you're going to get yourself in trouble. So distinguish which channels are focused on long-term investing and teaching principles, teaching foundational knowledge to be a better investor, and which ones are just talking about going to the moon and making a quick buck. And if you're in the market to make a quick buck, there's nothing wrong with that. Ultimately, the stock market, you're probably investing because you want to make money. But it's much simpler if you have a plan, a blueprint, and a structure and a strategy to get to an end goal. We talk about having life goals. What do you want out of life? And then you use money as a tool to get there. And so that blueprint is really going to be what's used to help your plan come to fruition. But you have to have this ultimate life plan of what you want out of life before you can use money to apply to that. And that blueprint is exactly what you're going to use to help that plan come to fruition. So the main message here before I get into my top 7 stocks in my $1.7 million portfolio, don't let anybody else influence how you buy. At the end of the day, every portfolio is unique. You're an individual, and every situation is slightly different. But you need to buy what you believe in, that you have conviction in. At the end of the day, you own part of a business, and you have high conviction that that business and the stock itself is going to be worth more when you need the money. And that might be 3 years, 5 years, 10 years, 15 years, which is why everybody's got different timelines, goals, suitability, risk tolerance, and all those different things. So I've gotten some heat over the last couple of months saying, hey, why aren't you buying stocks? I thought you were a long-term investor. Say, hey, I'm sitting on my hands right now because I bought heavy in October, and a lot of the stocks that I want to buy are too expensive. And instead of going out and trying to put a square peg into a round hole and basically find something that I think will fit in the portfolio that really doesn't, I'd rather buy the stocks that I really want to own at the prices I want to own them. And you have to understand, being disciplined as a money manager is not the same as timing the market. I have $1.7 million just in this portfolio that's long the stock market. It's not like I'm trying to time the market. I'm just sitting on $1.7 million of cash waiting for a perfect entry. I've already entered and I've got it built out, and I've got most of my money in the stock market. Anything I buy is just kind of a nice to have, a fringe play to build around that core. And if you're not in that situation, it's a very different game for you to play. And so one quick note before I get into the stock picks, talking about, hey, why aren't you making these best stocks to buy now? People getting frustrated. If I'm not buying any stocks, should I go make a video telling you to buy a stock? Now think about that. And it's different again, of course, because if you're a new investor, that might be the case, right? But here's the thing. I don't want to go out and force that square peg in the round hole just because I want views or subscribers on YouTube. Think about how many YouTubers that you've followed over the last couple of years that are just telling you whatever they want to tell you. And if you think about it, They're just trying to get clicks. There's clickbait. The thumbnails are misleading. They're just trying to get your views. And I'm not trying to pick on anybody, and I'm not saying I'm perfect. My point here is that if I decide not to make a video because I don't want to make a top 10 stocks to buy now and have people buy it and then come back and say, well, I could have waited a month and now they're on sale. And here we are today, early January, and that's exactly the case. So if I were buying, this is a better opportunity than a week or two ago. And if you have the right psychology and mindset, it doesn't necessarily matter when you buy, because if you buy Tesla at 200 or 250, if it's $1,000 stock, you're not going to look back and say, I wish I would have waited 5 days back in 2024 because I could have got a little bit better price. You won't remember it. As long as you're green, you're going to be happy. You're going to get to your goal. But the reality is most people don't have that discipline, that psychology, that financial education. So I can tell you that in something like the private community, if I say it on YouTube, you might be an investing alien and understand it, but understand that the majority of people on YouTube are not going to be in that same situation. So ultimately, as I've matured as a creator, and really just Fired Up Wealth as a community, we're doing what we think is best. And the objective has never been about just getting views and subs. We want your subscription. We want you to value this content, but I'm not going to do it at any cost. So if I decide to not make a video, there's a reason and you have to trust me for it. And this is why I didn't buy any stocks for the last 2 months, because I thought things were ahead of themselves. And now I'm starting to get my shopping list ready. We've had 5 red days, so expect some green, like I said. And without further ado, guys, let's just jump into it. The top 7 stocks in my primary taxable brokerage is a $1.7 million account. Here it is. All right. If you watched the community portfolio video just a couple of days ago, you'll see a theme. NVDA was the number 1 holding in that portfolio, and it is in my primary. Now, I bought this in 2018 in the 30s. It's up over 1,200%, and it's house shares. So we're playing to win. That means we took the profit, we took the initial cost basis and some profit, and what we own in that portfolio is essentially house shares. If it goes to zero, of course, that hurts, but it's opportunity cost, right? It's opportunity cost. I've already made money on NVIDIA. Everything I own is basically just free shares at this point, and I'm riding it out. Now, we talk about Masterclass 18, playing to win, and this is exactly what we're talking about here. If this stock has volatility, I'm less likely to freak out because of the situation I'm in. I'm playing to win. And I won't go into the analogy and explain the whole thing because I'll go on a 20-minute tangent. If you want to watch that video, I think it's a really good one. Check out patreon.com/firedupwealth. And you can see the entire portfolio. I'm going to do an exclusive that is available right after this one. 64 holdings, so stocks and ETFs that are in this portfolio. You can see all those holdings and the concentration for each. Go visit patreon.com/firedupwealth, and that's going to be for elite members and higher. Number 2 is going to be Microsoft. I've owned this one for a while too. I think it was 2012, up 700%. So yield on cost is really strong on this. I think over 8% or something like that. And if you look at Microsoft, it's a lot like NVIDIA in the sense the business has constantly evolved and pivoted. NVIDIA pivoting more into data center and AI, now more into software. Microsoft kind of the same thing. Activision acquisition, but going back to when I bought it, they just started ramping up Microsoft Azure to compete with Amazon Web Services, AWS. And I was in that space. I was working in software. We were using AWS, and I was like, hey, if anybody can compete with Amazon, it's probably going to be Microsoft. So I bought the stock around that time, 2012, a year or so after maybe they started getting into Azure. But you can see it's a very diversified business. And you look at a lot of these mega cap tech companies, they're that way. They're conglomerates. They're basically mini tech ETFs, right? Number 3 is going to be Amazon. So staying with that same theme. Now, some people are going to watch this and say, why don't you just go buy the QQQ? If you see the whole video, the whole portfolio, you watch the other video, you'll understand why. Because I have 35% in dividend stocks. And for my personal goal, I'm using this portfolio to outperform, to grow the wealth. And then what I want to do is I want to transfer those profits into blue chip stocks, SCHD, and so on, and live off that passive income. So this is an individual taxable brokerage that's going to bridge the gap between financial freedom and retirement age, where I can use retirement funds. And I do like a lot of these stocks as core, but if you see what I own, it is very diverse and there's nothing really else like it. And if you look at the performance last year, it actually outperformed the NASDAQ and the QQQ. In fact, this portfolio, even though it owns dividend stocks and ETFs, performed 60% last year, which beat all the major indexes and even the QQQ, the NASDAQ 100 ETF. But Amazon I've owned for a while now. This is a little bit unique because I've owned Amazon several times over the years, taking profits. I've owned a lot of these stocks where I buy them, hold them for 5, maybe 10 years, sell them, move on to something else, and sometimes come back. Amazon's one where I did come back in recent years. It's up about 127% right now. AMD is the next one, and this is a fairly new position. This isn't something we started buying until maybe 2021, a little bit of an entry level, and then we went heavier on this in 2022. So this is up 102%. I think this is going to do well, just like NVIDIA longer term. If you think of NVIDIA getting more into software, AMD is doing the same. I think both these companies have a lot of total addressable market and bright futures ahead. So NVIDIA number 1, AMD number 4. Number 5 is going to be Apple, and I've owned this for a long time. I think I've held this position since 2015, so going on 9 years, I guess. It's up about 447%. And of course, the dividends now, nice yield on costs. I like this company. I just bought a Mac Studio. I'm talking to you on a Mac. I use Mac. I know you're either a Samsung or a Mac person. As a creator, when I got started, I didn't know what I was doing. And Final Cut Pro was the simplest way for me to edit videos. In fact, I went on a cruise with my family to the Mediterranean, went with my parents, my wife, and I got back and I wanted to make a cool video to kind of share our experience. And I bought a Mac, an iMac, basically just for that, which sounds crazy. It's probably $1,500 or something back then. And I got Final Cut Pro and I used that, and I kind of fell in love with editing videos. I'm like, maybe this is something I can do. I really like the stock market. Maybe I could create a YouTube channel. And here we are. I created the YouTube channel in 2019. And that was probably a year or two after that first video I did. I started kind of experimenting. We'd travel and I'd make travel videos. My first intent was to make a travel blog, but I realized that having kids, I wasn't going to be able to travel full time and create enough content. And really my main passion is the stock market. So if you want to know a little bit about me, I played football in college. I was a D2 All-American, not D1, but D2, glory days, a long time ago. So I'm really into football, love fantasy football and NFL. I like to hike, long walks on the beach. No, I was kidding. But I'm really into the stock market. It's been passionate about this for as long as I can remember. And I just feel like personal finance isn't taught in school, and it's starting to get better. But if you think of especially my age, I'm Gen X, you think of Gen X or younger, a lot of us didn't get formal financial education. And then when you say, oh yeah, we taught financial education, it's not the same as what we're talking about here with the stock market. Maybe they taught you how to balance a checkbook, but they certainly didn't tell you about the psychology and discipline of long-term investing and how dollar cost averaging works and all those things. So Apple's the number 5, and I actually thought it was too expensive, around $200. I said this in chart day. It's good to see a pullback. Unfortunately, with stocks like Apple, when Apple pulls back, the market kind of pulls back. It's a major part of the indexes for both the S&P 500 and the NASDAQ. And so if, with Apple goes the market, unfortunately. Now, this is where it starts to get interesting after those top 5 holdings, because now it'll get into like the snowflakes. And I'm only up 16% on Snowflake. I've been bullish for a long time. I have high conviction. I'll continue to add at certain levels, not at these levels, but if it dips back down on earnings or something like that. So this is one of the top 6 holdings that's not up. It's not a bagger stock at this point. And this is one of my newer stocks, I guess. One where this is a new core stock in the last couple of years that I think has huge potential. And so when I think of this stock 5 or 10 years from now, this is one of my highest conviction stocks. It's part of my core in the top 6. And it's just one I have conviction in. Either you do or you don't. I personally do. And I worked in software for over a decade. I understand the business. I have friends that work there. I have conviction in Snowflake. Whether anybody else does or not, I tell most people to consider it spec, but for me, it's a core position. It's number 6 and it's up 16%. And I'm looking forward to the next 5 or 10 years to see where it can go. Number 7 is CrowdStrike. I've been long on this one since 2019. I bought a little bit after the IPO and I've added along the way. So nice cost basis, closer to that $100 range, up 135% or something like that. And I added some recently here when I thought it was way too low in 2023. I thought it was undervalued. So I added more shares and it's kind of helped build this position up. So I want to invite you to check out the entire portfolio and you can actually go do it for free. There's a 7-day free trial for Elite. Head to Patreon, go to patreon.com/firedupwealth. You can watch the next video, the exclusive that shows all 64 holdings and the concentrations. Go check it out. If you're new here, subscribe to the channel. I'm going to be bringing the heat in 2024. If this video is helpful, drop me a like, drop me a comment. Have a great rest of your day. Take care.